Elaine Kub is our corn and soybean market analyst this week. U.S. farmers are 3/4 complete harvesting this year's corn crop and 87% finished in soybeans. Both marks are 7 points ahead of the nation's 5-year average. The USDA in its October crop report said it's expecting growers will bring in nearly 13.6 billion bushels of corn and almost 3.9 billion bushels of soybeans for the 2015 harvest. Elaine joined us from South Dakota Thursday morning. We started by asking about harvest progress and results.
Well, I'm up in South Dakota this week, and we just the crew that I was working with driving grain cart for, we just finished yesterday, so that's good. I think we were a little earlier. I think there's, obviously still 10% left here in the state if you look at the USDA numbers. But overall, very good weather here, and this has been true throughout the Corn Belt, as nobody's really been suffering by any major rain delays. And so particularly with soybeans, this was almost a record fast pace. Those just got off really fast, and yet the industry has been able to handle it. We haven't seen any major disasters in the basis market or in the shipping problems, so no problems. This is a pretty ideal harvest.
Good yields?
Good yields here, not record-breaking yields overall, and again, I think that echoes the entire Corn Belt. You're looking at spots where they did have spring problems. This has not been an ideal year for growing corn and soybeans. But in the places where they didn't have the problems and the rain just helped the grain, there are some spots where you probably do have absolutely farm record yields. But overall, this is not a nationwide record yield or record crop year.
Do you think the USDA then holds with its current expectations when it comes to the November 10th crop report?
Well, possibly. I think they probably won't make any more adjustments to the acreage because they've already factored that in. But because we've had such very good harvest reports from the yield for soybeans, there is a chance that they could raise the yield for soybeans again, which would be bearish to this market, but I think the market could withstand that. Otherwise, we're seeing pretty tight spreads, suggesting that the commercial market is not overwhelmed with supply. The export progress again this week was very, very high. In fact, a marketing year high in the actual shipments. Was it 2.8 million metric tons? So a very good pace and overall bullishness for soybeans that could withstand any sort of bearish tweak from the USDA.
You wrote on DTN this week about Europe, China, and the strength of the U.S. dollar. Just for perspective, tell me about the U.S. dollar and kind of where it stands right now.
Well, the U.S. dollar has had a wild week last week, and it wasn't really based on too much of the U.S.-based arguments. It was more of the euro itself falling. And even though our export products, our ag products that we're trying to ship out to foreign buyers, aren't really competing with euro-based or euro-denominated ag products too much. Some wheat exports we do compete with, but nevertheless, that has an effect on the dollar index, and so it has an effect on the grain futures trade. It's, the corn and the soybeans more so, but the corn and wheat really didn't respond to that higher dollar last week, and it's continued higher this week also. So it's been quite resilient, but it's really hard to say if we wouldn't be having more of a post-harvest or late harvest bounce here if these grains weren't having to fight against the headwinds from a continually higher dollar. And honestly, going forward in the months ahead, it's unlikely that the dollar is likely to go back down. We're not likely to see the Fed make any decisions that would bring the dollar down. They're only likely from this point forward to continue to be bullish to the dollar.
What impact would a change in interest rates have?
Well, it would be a confirmation that we are on the path that the Fed wants us to be, that the economy is stronger, and it would, again, only bring in more of the foreign investment and more of the bullish ideas that the U.S. economy is strong and the dollar should factor that in with a higher price.
Is this a long-term concern to exports, do you think?
It is, particularly when you look at the competition. I believe that Alistair is telling you this week that the Brazilian economy is not great. So you've got a Brazilian currency that is at a decade low, a Ukrainian currency that is a decade low, Canadian currencies at a decade low. Basically, all of our exporting partners, their currencies are very cheap, making their grain much more competitive on the export market, and I don't see any expectations for those situations to change. The only thing that's changing is our dollar getting stronger. So yeah, this is a long-term, or at least medium-term, headwind against the grains.
Okay, let's talk about your price outlooks for corn and soybeans. Let's start in corn. Where do you think corn moves to?
Well, I think we should be aiming for another 40 cents. And maybe not here by the end of the year, certainly, but you expect to see a seasonal high in the spring, and I do expect to see these prices continue to recover somewhat just seasonally, or certainly if we see problems in South America, you could start to get some bullishness in the row crop markets over the next few months. However, again, based on these dollar expectations and overall economic expectations, I would want to be sort of conservative with my hopes and my optimism here. Maybe only another 40 cents on corn, maybe another 70 cents on soybeans. So if you saw soybean futures, nearby soybean futures at $9.50, for instance, that would be a time to hit the sell button, in my opinion.
Anything on new crop that you think, or any price targets on new crop that you think you'd be willing to move at with a rally?
Well, I mean, again, just sort of a general sense that we should see a rally here after harvest going into the spring, but it would probably be somewhat limited. So again, that 40 cents, 70 cents, that's what I'm looking for.